from 4 a.m. to 6:30 was pretty much the only time that I could be by myself, focused on my business while still having a full-time job and having two little girls, a wife, and so forth. And so, um, starting my day off, definitely reading through, listening, and going through, setting the mindset for the day, and then focusing on, what small actionable item can I take that day that's going to help propel me forward.
Welcome to the Healthy Investor Podcast with Bob Mastroianni, where you and I will learn from successful real estate investors, entrepreneurs, and other highly driven individuals about their journey and the healthy habits and routines that play an integral part of their growth. All right, welcome back to the Healthy Investor Podcast. Today I have on the show Matt Damon. Matt is a highly skilled professional with over 10 years of experience in finance and analytics leadership in Fortune 100 companies. Matt is a leader with the ability to think strategically, innovative, influence, and drive collaborative and open communication and thorough execution. He began working in real estate development industry in 2012 for a startup focused on land development and domestic and international renewable energy projects. In 2019, Matt started Broadleaf REI, a residential rehabilitation company that buys and stabilizes distressed properties. Matt's greatest joy is being a husband and a father to his two wonderful daughters. Matt Damon, thanks so much for being here today.
Hey, Bob, thanks for having me on. I'm excited to be here today.
All right, great. So wanted to jump right into it a little bit. If you could tell a little bit about your story. So your bio talks about how you began Broadleaf REI in 2019, doing some flips, but I know your business has enhanced, your business has grown, and you've sort of moved into some big undertakings in multifamily also, along with some of your flips. So maybe you could just sort of start off with your journey of how you transitioned from your W-2 job into what you're doing today.
Sure. So I live in the greater Boston area, was working in Boston in finance and analytics for some larger companies and having a blast. And sort of my journey began when I was reading Rich Dad, Poor Dad. My first daughter was on her way to into this world, and my company was having layoffs. And I saw the fear in some of the guys' eyes that I'd worked with so closely for like the last 7 years. And that fear, I began to think, oh my gosh, like these guys have kids in high school and college, and they got big bills to pay and so forth. I need to be ready for my day when that comes up. And that kind of like those three things all happening at the same time, realized my need for passive income, multiple streams of income, and so forth. And so in 2019, we made our first purchase, which was a residential duplex. And we bought it, something that needed a ton of repairs. And we fixed it up and held on to it for many years and then sold it. We sold it this past year in 2022 and moved those funds into larger multifamily and so forth. Over the past 3 years, we've done 27 deals, about $17 million in assets that are sold or still under management.
Wow, very nice. So that first deal, I guess you were still working in the finance industry, correct?
Yeah, so I stayed, I basically side hustled it for probably my first 5 or 6 deals completed. And then I had a pipeline of projects that were going to be completed within the next 5 to 6 months. And that was when I felt like, okay, I've replaced my income from my W-2 job with income from real estate. We have passive income coming in from some of our duplexes that we owned. We owned a couple at that point, and we have a pipeline of projects, so we can expect some healthy income coming in the future. And I was like, okay, I think it's time to make the jump. And we made the jump. I ended up hiring a couple of folks to join the team to take some of the project management and some of that back office paperwork stuff off the plate. And that was huge. Allowed me to focus a little bit more on growing the business and scaling it.
So did you have, prior to this, did you have much experience in project management or construction or anything on that side of the business?
The family I grew up in was more of a blue collar family. So,
Okay.
growing up, like my dad was always working on the house and like fixing things up. Um, and my brother and I, we started a landscaping business, and it turned into a house painting business. And when we were in late high school, we were making more money than anyone we knew that was our age, just mowing lawns and painting houses. It was our little side hustle. And then throughout college, I did some roofing. I worked as an electrician's apprentice for a couple of years, but um, I wouldn't say I'm like overly handy. I don't do the work, and maybe that's one of the mistakes that a lot of people get kind of stuck in, which I was able to sidestep because I had a full time job. I didn't have time to swing a hammer, or anything
Sure.
like that. So no, I wasn't. I wouldn't say I had a ton of experience, but I surrounded myself and asked a lot of questions of people and tried to get multiple opinions on things and joined meetups in the area for people flipping. So, that created the ability to just pick up the phone and say, "Hey, I got a question for you. Can you help me out with this? Or how would you handle this situation?" So forth.
Well, that's great. Yeah, and I think first of all, I think you're right. I think maybe from HGTV or different conversations, people think if they flip a house, they need to have the hammer and sawzall in their hand. But I also think there's a value in knowing what work should be done and sort of knowing how the work should be done, even if you're not doing it yourself, so that you can sort of hold contractors accountable and those sort of things, right?
100%. I mean, you could get yourself in a world of pain by doing too much on a project. You definitely have to figure out what needs to get done to take this house to market. Sometimes it's just cosmetic stuff, and I see certain folks that, when I was early in my journey, and still to this day, I think one of the things that has helped me out is getting multiple pieces of advice from multiple different people, and trying to keep the scope to just the things that are going to be most profitable. Not doing everything. You can't do everything on every project. You got to figure out where you're going to add the most value quickly, that an end buyer is going to seek.
Yeah. Okay. So now moving forward, you've left your W-2 job and moved into real estate full time. And I know, you've had some big wins recently that sort of equate into the multifamily side of the business. So I guess maybe we could talk a little bit about that transition and what you're doing in
Sure.
that side.
Yeah, so I mean, some of this stuff, I think some of it we just got lucky just by putting ourselves out there enough times and talking to folks. But we had a wholesaler bring us our first multifamily project, our first. It was an apartment building, but it was our first one that was more than 5 units.
Okay.
Uh, and so it was a 7 unit building that someone brought us, and it scared us because the windows were boarded up. It was vacant. And it was basically a fire sale where the guy was trying to rehab it and just kind of failed at it. And I sent my team through first. I wasn't there for the first walkthrough. And they came back and they said, "Matt, I don't think this is going to be that bad." And I just kept running the numbers. I'm like, these numbers make a ton of sense on paper. I got to get inside this building again. So I came, brought the team back, and I did a walkthrough. And I was like, you guys are right. There's a lot of money to be made if we could stick to our budget at this purchase price. And so I think there was some bids that were higher than ours, but given our extensive experience remodeling houses and stuff like that, they just felt like, hey, these guys have a track record. Let's go with them. Um, and so that was a fun project because we were able to we bought it in April this year, 2022. We were able to do construction on it, renovate it, get it fully rented and stabilized. So we finished the refinance on it. Just a couple weeks ago. I would say it's about a month ago at this point that we finished the refinance on it. The cool part about this, Bob, this is the part that makes me so excited, is we had promised our investors that we would return a significant portion of their capital back, and we estimated that to be like 40 to 50% within a year. Um, and this was within maybe 6 months, 4 to 6 months, that we were able to return actually 80% of their capital back. So it was a huge win for folks. We still have proper reserves in place, and now they're going to cash flow throughout the life of this project, which is fantastic.
That is super exciting. I remember when you were getting ready to take this opportunity down. I think you and I were together sort of earlier this year. May have been actually May we were together, so you may have just purchased it. And I remember some of the details that stuck out to me. And one of the details, if I'm correct, is that you had already received a appraisal that was higher than you were paying for it, correct?
That's correct. Yeah, that gave us a lot of confidence going in. Our When we were buying the project, the bank had an appraiser come through, appraise the property. We bought it for 710 and appraised for 950. So we're basically at about 250K of equity right off the bat to start out with. So that was nice to take to, both my family and our investors to say, hey guys, we're deep in the money starting out. So if we need to sell this thing today, we should be able to get our money back, and maybe some on top of that.
That's great. And then to be able to, there's a lot of conversation in the market right now. Interest rates are going up. It's becoming a little bit more difficult for refinances. But I think you just proved that if the equity's there, the value's there, you refinance, you were able to pull some money out, and giving your investors back 80% of their initial investment is amazing.
Yeah, absolutely. That was that. So that strategy is called the BRRRR strategy, which stands for buy, renovate, rehab, rent, refinance, and repeat. So it's BRRRR. And basically, that's a strategy to let your capital continue to come back to you, so you can continue to scale. Right? You got to be smart about it. You don't want to deploy too much cash and so forth. You need to make sure you have proper reserves and so forth. But that strategy, the refi and roll sort of move, is super beneficial in terms of scaling and allowing you to get, kind of grow your business.
Yeah, and I bet, when you're looking for your next capital raise, those people who receive their 80% of their money back already within 6 months are going to be first in line.
100%, right?
Well, that's great. So, one of the things, just talking about capital and capital raising, I recall a previous conversation that you and I had, and correct me if I'm wrong here, but I think when you left your W-2 job, people were asking, hey, what are you doing? What are you doing? And you were able to find some investors sort of that way. And I think maybe if you could talk just a little bit about the investor process, because I recall you saying that, and I'm one of the people that has this big, force field around raising funds because I've never done it before. And you said once you started doing it and you were surprised that it wasn't as hard as you had anticipated.
Yeah, a good deal finds capital very easily. Finding great deals. My big worry when we're still flipping houses, but we started flipping houses and we started getting into these larger multifamily deals was that, when we start out, we need a lot of money. And the truth be told, it's not the case at all. If you have a little bit of experience, you have a track record, and you have a great deal, people sign up for it, and people want to be part of that. They get excited over those things, and so we basically offer two products. So on the fix and flip side, we offer a loan package which offers double digit returns. So that's a loan that says, hey, listen, if you want to come and partner on a flip, we'll give you a 10+% return on your money while we go and do the process and flip it. And that has been wildly successful. We've raised seven figures doing that over over the last couple of years. And the best part is giving the money back at the end of the project with interest. And people are like, wow, the market, especially this past year and the year before, wow, the market fell 20%. Here's positive 14% or positive 10%. And it's like, so a lot of our investors are older, or lenders in this case are older. And so, they don't have time on their side to let the market do its thing and come back on up long term. They really need to play their cards right. And so this was like really exciting for us the last year and a half to be able to tell folks like, you beat the market again. We have a lot of repeat folks that continue to come back and so forth. But then on the equity side, when it came to raising money for our multifamily projects, we've never done a syndication. At some point we probably will. At this point, we've done just joint ventures, so it's people joining up in a program A lot of times they take a non-management stake in the role, and we handle all the management, so it's very passive on their side. Um, and we provide regular quarterly updates and so forth, or monthly updates via newsletter, and they can reach out for any questions. But that has been very, very simple. I mean, it's been very easy. I mean, if you're looking to start out going down this path, start have some sort of CRM, start keeping track records, start producing materials like what a newsletter, a podcast, something that's going to put your name out there, and get back in front of these people on a regular basis. And if someone's not interested, they're just not interested. It's fine. Just move on. Find the people that are, because there are plenty of people that are looking for great places to place their capital.
That's great advice. Do you find that it's a different pool of people who are interested in your fix and flip opportunities versus your capital long-term buy and holds?
At times, yeah. I mean, they can be very different people or in different places of life. Some people are looking to save for their first home, right? And they don't have quite enough capital to put down 20% on, and they're just not ready with prices the way they are. They're not ready, and so they might be interested in a short-term loan, like a fix and flip would be.
Mm.
And there's other people that are, maybe they have an old 401k plan that's been, sitting around that they've rolled into an IRA that they want to invest in these sort of projects. We have plenty of people that like that aren't looking for a return back for 5 to 7 years, and they just say, "Hey, give me the best return you possibly can, 20+% a year. That'd be awesome, for the next couple years, and then just give it back when you're done." And that has also been one of the ways. So yeah, sometimes they are very different.
Great. So, any other multifamily opportunities that you're working on these days?
So we just closed on 13 units a little over a week ago. So that was 13 units here in Worcester, Massachusetts. And we bought this with 5 vacancies. We're going through renovating those apartments, and we actually already have them leased, which is very exciting. So we're leasing them out to a United Way nonprofit group,
Oh, nice.
which helps families that are it's basically immigrant families that are looking to get onto their feet and get established and so forth. And so it's a way for us. We feel good as landlords to give high quality housing to some of these folks that don't have housing. It also provides excellent returns for our investors as well. So that's huge. We are also putting in right now we're working on two different things. We got a 23 units multifamily that we're putting in an offer in on right now, as well as a 47 unit a building that we're putting in an LOI on as well. So
Very
it's
good.
fun. It's exciting. It's crazy.
Awesome. So are these, obviously your first larger multifamily, the 7 unit was a pretty heavy lift as far as construction, as far as, sort of what you had to overturn and changes you had to make to the property. Are these other opportunities heavier lifts also?
Yeah, I prefer the heavier lifts. And the reason why is because you can buy low and you can force the value upward, force depreciation. I think that in this market where there's uncertainty around how much we're going to appreciate, are we going to go into a recession or not? Those are the sort of projects that I like because you're buying so far below the market. And then when you come in and you add that value, it forces the value up. Even if the market does some sort of correction, you're still in the positive, in the green on that. And so that to me is the type of projects that I want to be positioning myself in right now.
It's great to hear you say that. And one of the first immediate interesting thought to me was how in the world of real estate and real estate investing, there really is no one right or wrong way. And you and I have many similar friends and investment partners and people that we network with, and some people are like, absolutely not, I do not want the heavy lifts. And then for you found the way to add value, to really take on those projects and make a bit of a niche out of that, and you're not afraid of those. So then you're able to really buy at a right price, do the work, bring up the value, and force that appreciation. So that's really cool to see.
Yeah. I guess I thank you. I appreciate you saying that. I guess one of the things that I would like to eventually get into, which I'm not, is the new development side of things. There's a lot of folks that are doing new development, new builds. I think that's something that could be very exciting, and it's untouched territory from the multifamily space for my business, and it would be something I definitely would like to get into at some point.
Great. So I want to transition over. This is the Healthy Investor Podcast. I want to talk a little bit about healthy habits and routines and the sort of things that you're into that you feel, contribute to your personal success, your business success. I mean, for those, obviously listeners probably do not know, but you and I actually met at a boot camp, and we met 6 o'clock on a Saturday morning on a 5 mile run before the boot camp even began. So I know you're not afraid to get out there and run a little bit and do some of the things to keep yourself healthy. So tell me a little bit about what that looks like for you.
Yeah, I love running. I shouldn't say I've always, but ever since I met my wife back in 2012, I've been a runner for years. She was a runner. She got me into running, and it's something that we did a lot together, throughout the last 12 years, and just absolutely loved it. I guess 10 years. Um, I would say the other piece of sort of healthy habits that I've gotten into is in the morning starting my day off with either journaling or gratitude. That has been a big piece of my journey in setting the mindset for the day. Podcasts have been a big piece of that. So typically I get up at 4 in the morning, Monday through Saturday, pretty religiously. It's very rare that I miss a day. Um, I've done that since the beginning of 2020. So from 4 a.m. to 6:30 was pretty much the only time that I could be by myself, focused on my business, while still having a full-time job and having two little girls, a wife, and so forth. And so, um, starting my day off, definitely reading through, listening, and going through, setting the mindset for the day, and then focusing on, what small actionable item can I take that day that's going to help propel me forward.
I love that you talked about the mental aspect. I think, they say the morning is the rudder of the day, right? And that's how you steer it. Just today, I'm getting over a little bit of a cold. You may be able to hear that in my voice in the recording. So I'm getting over a little bit of a cold. So it took me a little bit to kind of get back to my routines. But today was really the first day that I was able to get back to waking up early, getting my meditation done, and doing my journaling. And I can tell you that I don't think it's coincidence that I'm also starting to feel better, but I also feel better that I did that. And it really helps me to stay focused throughout the day. And it helps me to narrow in on what things I plan to try and achieve throughout the day.
100%. Yeah. I mean, you're absolutely right. I like that quote. I've never heard that quote about the morning is the rudder of your day. It's huge.
There we go. Write it down. I don't know who to give credit to for that, but someone deserves the credit. So, just out of curiosity, because I know many early risers are 5 a.m. people. You're a 4 a.m. guy. What does bedtime look like for you? I know you have two little ones at home. Do
Yep.
you even have a bedtime?
It's changed over the years as they've gotten older. They definitely go to bed later and later. Um, but for me, I'm in bed by 9, pretty much every night. 9 o'clock. I actually have an alarm that goes off at 8:45 to remind me to go to bed,
Hmm.
because if I don't go to bed and I don't get the sleep, then I can't get up. So setting yourself up for success is a huge piece of this. And it's hard because sometimes you just want to watch that extra show and do a little bit more binging and so forth. And you definitely have to be disciplined about, okay, it's time to go down so you can get up.
So, what time do you want to be asleep by?
I think I fall asleep within 5 minutes of hitting the pillow. So I'm
Ah,
in bed by 9. I'm asleep by 9:05.
I am jealous of people like you. So usually by like my second episode of Friends, I'm asleep.
There you go.
But interesting for me, I'm usually in bed around 9 o'clock
Okay.
and I'm asleep by 10. But in my house, we don't turn the TV on before 9 o'clock. My TV in my living room is probably the most underutilized utility you've ever seen. So that's really the only time of day I ever put the TV on. So I just like put the TV on. It's my way of kind of winding down. And I really try to make sure that I put myself in a position to go to sleep by 10 o'clock. Similar to you, I have a 9:30 alarm that goes off on my phone that says it's time to go to bed. And, I try to make sure that I live up to that as much as I can.
Yeah, absolutely. If you want to enable that success, if you want those mornings, you want the morning, you want to win the morning, you got to win the evening too.
Yeah, absolutely. Cool. So I want to transition over to the final segment of our podcast or our interview, where we bring up the same three questions to all of my guests. So for you, Matt, what is your definition of success?
Great question. So I've been a world traveler for a long time. We say I got the travel bug in college. So for me, success is the ability to use my time on my terms. So I look at success in terms of three things. Do I have financial freedom? Do I have geographic freedom? Do I have freedom to use my time as I want to use it? So you'll hear me talk a lot about that, the three levers of freedom, and definitely after all of those and want to spend my time being geographically free, figuring out how I don't have to necessarily stay in Massachusetts all the time. We could go to Europe, go here, go there, and travel and explore and experience the world in different ways.
I love that answer. And I know this is probably a softball follow-up question, but do you have any big travel plans coming up?
I think you knew that answer. We didn't talk about this part prior to the podcast starting, but I do. I'm taking my girls to Barbados this winter for 6 weeks, and this is a life dream of ours. My wife and I to take our girls and to travel with them. We are going to be working on this trip. It's not a vacation. There will be vacation time, for sure. We'll probably take 2 weeks of the 6 as vacation, but it'll be predominantly a work trip and get to experience local Barbados, not just the resorts and so forth. We're stepping away a little bit from that, but we got a beautiful place on the beach that we'll be enjoying.
That's excellent. And that truly is living your mission and your purpose there. I think you and I spoke about that a few months back, that you were hoping to be able to do that. So as you spoke about what your definition of success was, a little light bulb went on above my head. And I said, wait a second, Matt's actually doing that. I'm pretty sure he has something coming up. So that'll be an awesome trip and such an amazing experience. And I know for me, I've been able to do that with my family a bit, to travel to Florida and spend some time in Florida and live a little locally and still work, right? And still be able to do the productive things. And then the other part of that is that we decide to take times where we say, okay, this trip is going to be work related. Work's going to be involved. And then you also have to take one where you say, okay, this one's vacation. And this one's where we're going to kind of shut it down. But it's excellent for you. And I'm really happy for you that you're able to set up your business. You're able to set up your life so that you can go spend 6 weeks and do this with your family. So it's going to be awesome. I can't wait to hear about it.
Oh, I'm excited for my girls. I think the joy of seeing them this winter on the beach would just be really nice.
Okay, now you're rubbing it in. No, I'm kidding. So let's move on to question number 2. For someone who's newer to investing or even learning to focus on their goals and their path to success, do you have a good book recommendation?
Okay, so I have a book that changed my life, and it's Profit First for Real Estate Investing.
Okay.
I think most people typically go to our Purple Bible, which is Robert Kiyosaki's Rich Dad Poor Dad. But that book definitely kickstarted my journey. But Profit First for Real Estate Investing was absolutely instrumental in providing financial peace of mind with how do we manage the finances of our business. And I read that in March this year, and I definitely took action on that book. And I won't go into too much of the details of it, but financially, I feel like we're in a much better spot as a result of reading that book, and that had a huge impact on me.
Well, that's a great recommendation, and I have not read that book yet. And I just, if you're watching the video, you probably saw me write it down because I'm going to add that to my list as 2022 is starting to come to an end and planning for 2023, that seems like the type of thing that I probably should definitely be interested in checking that book out. So want to thank you for coming on. I really appreciate you taking the time and sharing your knowledge. Before we get to the final question, how can we support you, and how can people reach out to you if they'd like to?
I'd love for people to reach out. I do have an Instagram, Broadleaf, REI Boston. So at Broadleaf, REI, which stands for Real Estate Investments, Boston. I'd love for people to reach out, follow us, interact with us, give us some feedback on some of our projects. And, if you're interested in learning more and being part of something, feel free to reach out, direct mail us through there, and we're happy to discuss.
Great. So final question, if you could think back to me, to a young Matt, around ages 10 to 12 years old, knowing what you've learned so far on your journey, what are 3 pieces of advice that you would give to that young Matt, or really any pre-teenage child, to help guide them towards success?
Wow, that's a tough one. Okay, so a couple pieces of advice is do what you say you're going to do. I think regardless of whether it's easy or not, I think that's super important. So that'd be piece number 1. Number 2, always act with integrity. It's probably the same as number 1. And number 3, I think, the more you can learn about the power of compounding interest, I think is a big piece of, you could work really hard at a W-2 job, but if you learn how to use compounding interest and the power of that, it's just tremendous.
And it's so true that the earlier you learn about compounding interest, obviously the more time in your life that it gets to compound. So that is truly a great advantage if you can learn that earlier and earlier in life. So
yeah. I'll add to that, that Warren Buffett, he made, after 65 years old, he made something like 85% of his wealth. So the first, the largest portion of his life, he made 15% of his wealth, but the back half of his life is where he made the 85% of it. So truly the power of compounding interest.
That's amazing. That's amazing. Well, thanks so much for coming on, Matt. I really appreciate it. Please reach out to Matt Damon, Broadleaf, REI Boston on Instagram. He's my friend, and I'm grateful to see his success, and I'm really glad to see him come on today. So glad to have you on, Matt. If you're listening and you got some value out of this, please leave us a positive review and go make it a great day. Thanks so much for joining me on the Healthy Investor Podcast. Check out the show notes for more information about connecting with our guest. If you enjoyed what you heard today, please head on over to iTunes and leave a positive rating and review. It would mean the world to me. I'm grateful for your support, and I wish you an abundance of success on your journey to healthy investments and a healthy life.